right, so hi everyone. My name is Muneeb. I'm the co-creator of Stacks, and today I'm here to basically, give you guys all a background on what's been happening in the Bitcoin ecosystem. Like, especially in the last 1 year, there has been a lot of developments, a lot of sort of like revival of builders coming back to Bitcoin, and lots of exciting things happening in the Bitcoin L2 space, which some of you might be familiar with it, some of you might not be, but happy to give you like a overview and tell you a little bit more about what's going on with the Stacks project. So before we dive in, I think one question that a lot of people ask is like, hey, why Bitcoin? Why bother building with Bitcoin? And I think at a very, very high level, so I'm some background. I'm a Bitcoiner. Been holding Bitcoin for 11 years now, and I think I'll hold forever. And I think I've been in love with Bitcoin for a very long time, but I'm not one of those people who sort of like have blinders on, who only look at the Bitcoin ecosystem. I think I've been very active in the rest of the crypto industry, learning from various different projects, participating in things, and so on. And I think one of the reasons that I sort of like love Bitcoin is just the simplicity of it. So I would actually give an analogy with Celestia. A lot of people are excited about Celestia because it's very simple and it's trying to do just one thing at the consensus layer. And I think Bitcoin is sort of like that. Bitcoin is super simple. It's just trying to do one thing, and that is to define a monetary asset that is really easy for people to understand. There will only ever be 21 million Bitcoin, and that's all sort of like you need to know. And it's sort of like designed to be durable, right? Like I always give this analogy that I could dust off a copy of Bitcoin Core from literally 2013, the year I started, and that software will still sync up to the current Bitcoin chain and work, right? Like how many pieces of software can we say that about? It's designed to be durable. It'll be here decades from now, and that's the thing that Bitcoin is doing. Another thing that I love about it is it's very grassroots. Just the way the project started, you have diehard fans who are running their sort of like nodes in their homes, and the community is extremely grassroots. So it's very, very decentralized. Decentralized things are very hard to sort of like kill, right? Like you can take out any company, any individuals, but decentralization sort of like means resilience, and Bitcoin is going to survive because of that. So because of these properties, I've been always interested in like, how can we use Bitcoin as a stable base layer and try to build interesting things on top of it? And I think that's sort of like the thing that's happening now, and we can get into it. So the way I sort of like view Bitcoin is you see almost like north of $1 trillion in capital, and you see the value there, but it's capital that's very passive right now. Like people aren't doing anything interesting with it. If you look at Ethereum, north of like 30% of ETH is actually actively deployed in smart contracts. People are earning yield with it. People are doing all sorts of interesting things, but that's not happening with BTC right now. And I personally see that as a massive opportunity, right? Like this capital is already here, right? This is not some small ecosystem that you need to like bootstrap from scratch. It's just that we need to make it programmable. We need to make it easier for developers to come in and be able to sort of like bring the DeFi primitives that we have learned in so many other ecosystems like Ethereum, Solana, Near, and others, and try to bring that to BTC, the asset. So one mental model I try to tell everyone is that you should try to separate BTC, the asset, from Bitcoin, the rails, right? So BTC, the asset, is getting institutional adoption with the ETFs, and like all over the world, people are beginning to understand what the savings technology sort of like means. But Bitcoin, the rails, they really suck, right? Like that's like what we need to admit, that there hasn't been a lot of sort of like advancements and developments in sort of like upgrading Bitcoin rails. And we all know that you're not gonna upgrade Bitcoin at the L1 level. Like that's sort of like a nice property to have in a way, that it's very, very hard to change Bitcoin at the L1 level. So what we need is other rails like L2s, or better bridges, like more secure bridges, where you can take your capital from L1 to L2. And most of the people will eventually, my view is, they will experience BTC on L2s rather than L1, because you can't even onboard 1 billion people to Bitcoin L1. It's simply just like not possible given the UTXO model and the scalability properties. So most people in the future, when they will discover Bitcoin, they would actually be running on some L2, and they wouldn't even really know that that's happening, and it would sort of be abstracted away from them. So let me tell you a little bit about, I told you that I've been in Bitcoin for over a decade at this point, and the early days of Bitcoin were actually super exciting, right? Like I know Vitalik is here. Vitalik started his career on Bitcoin. Like he was actually proposing ideas to the Bitcoin community. And then when he saw the resistance, he's like, okay, you know what? I'm going to go and then start a different project. I, on the other hand, stayed there, right? Like kept sort of like pushing the Bitcoin community and trying to have that change happen over there. And I think the early community was actually pretty exciting. Here are some facts. NFTs were invented on Bitcoin with Counterparty around like 2015 or so. Stable coins were invented on Bitcoin with Tether, with the OmniLayer protocol. Even like ICOs were invented on Bitcoin with colored coins back in the day, right? And we have sort of like forgotten that a lot of innovation used to happen on Bitcoin. This is pre-Ethereum era. And then Bitcoin sort of like went into these dark ages. Like I classify them at between like 2017, when the civil war between big blockers and small blockers happened, and up till I would say 2022, Bitcoin was in these dark ages. There was a lot of like, intellectual capital that even sort of like left Bitcoin and went into other ecosystems because they were much more welcoming to developers. They were much more welcoming to innovative ideas, trying out new things, being experimental. And Bitcoin started becoming like sort of like this weird place that is just rejecting sort of like any new thing that anyone is trying to do in the Bitcoin community. So, but we survived the dark ages, and starting 2023, with, I don't know how many people are familiar with ordinals, but there's sort of like this new NFT standard on the Bitcoin and L1. And that really kicked off this renaissance of Bitcoin, because so many people sort of like, it clicked with them that if your NFT, if the image is actually stored directly on the Bitcoin chain, people sort of like intuitively understand that this thing is not going away. It's very durable, right? Like it's not like it's a pointer to something on AWS or some other file that's going to disappear. Your NFT picture is literally stored on the Bitcoin L1. And that clicked with users. A lot of people came in, they started, minting all sorts of NFTs on the Bitcoin L1. And a lot of these, a Bitcoin existing community that was sort of like saying no to every single application or every single new use case, they couldn't stop it, right? Like, because this is like a decentralized ecosystem, is permissionless. So people came, and that started changing Bitcoin culture, like in a way that I haven't seen in the last 10 years. And I think this was probably one of the most positive things that happened to Bitcoin, because what it did was that Bitcoin fees started going up. When fees start going up, we've seen this in Ethereum, then people realize that you need L2s. Right, so you sort of like break the L1 to make the point that you really need these L2s, and new capital starts flowing in, new developers start coming in because they see the opportunity. They've seen how the L2 landscape on Ethereum, for example, developed very rapidly, and they saw the opportunity that this is a $1 trillion asset class, and people can come in and they can start building new Bitcoin L2s. And that's the way to scale Bitcoin, right? And a lot of the folks were sort of like putting all of their eggs in the basket of Lightning. And I think when the fees went up something like 200x, we also started seeing like cracks in the existing implementations of Lightning, where people couldn't close their channels, and they're like, oh, maybe Lightning is not the only scaling solution we need. Maybe we should experiment more. And I think that was an extremely sort of like a positive thing for Bitcoin developer culture, because now there are tons and tons of new projects that are getting funded. So let me give you like a high level overview of what I mean by Bitcoin L2s. I use that term in a very, very broad way. There are some systems that are completely sort of like, like a federation model like Liquid. I would even call them L2s, right? Like, because they're using BTC as gas. The main asset there is BTC. And I think then you can sort of like compare and contrast between different L2s that way. And then on Ethereum, I know the Ethereum community has gone through this debate a lot. Like, what exactly is an L2? What's trustless? What's not? And we can like go sort of like get into some of those definitions over here as well. So from a technical perspective, I know a lot of you are developers here. Like, there are 3 dimensions to sort of look at. The first one is sort of your bridge security, right? Like, how trustless is the bridge through which you're taking your Bitcoin from the L1 to the L2. And over here, remember that Bitcoin is not very programmable. Like, Bitcoin script is like very, very limited by design. So you can't do much at the L1 level, the kind of stuff that, for example, you could do on Ethereum or other places, where you can design sort of like new systems that are more trustless. Bitcoin L1 is not going to change. So I think for the longest time, most of these bridges were effectively multi-sig. And that's where a lot of the criticism was also coming, that, hey, these things are not really L2s. If you look at Liquid, for example, you're sort of like completely trusting Blockstream and their friends in a way, the people who participate on the federation, that if I send my BTC to Liquid, I'm trusting them that they will send it back when I have a withdrawal request. Like, it's a fully trusted sort of a setup, a federation. And then you can do better than that. Like, for example, in Stacks, So think of Stacks as like it started off as a sidechain, it's trying to upgrade to become more closer to a Bitcoin L2. There is a decentralized group of signers that have capital locked, so they have some economic incentives to actually process the withdrawals. And there is threshold signature-based wallet where it's open membership. So every sort of like, cycle, signers can come in and go. That's better than a federation, right? So you're not trusting sort of like these preset group of parties who have no financial incentives to do the right thing. Over here, these people do have a financial incentives, and it's a decentralized group of signers. Anyone in the world can sort of like lock STX capital and become a signer. That's better, but obviously it's not as good as the sort of models you see in Ethereum where people can actually force withdrawal of their assets directly at the L1. And that's where something really exciting happened. It's a project called BitVM. It's been around for less than a year. So if you haven't heard about it, I definitely encourage you to go and check it out. Basically, what BitVM did is think of that as like it's sort of like an interactive game people can play on the L1 to prove certain things. So almost like, if you squint your eyes, it looks like a fraud-proof system on Bitcoin L1. But the beauty of it is it doesn't require any changes to the L1, right? So BitVM programs can be implemented and published now. There are prototypes that are live today even, and people are working on more stable implementations. And that takes sort of your trust assumption from a M of N security, which is what Stacks is working on, that you have to trust the majority of the signers, to just 1 of N, which is a huge improvement in how much trust you're putting on the bridge. And that 1 could be you, right? So if it's like 1 out of 100 people on the bridge setup, that 1 could be you. So you're really not trusting anybody else. You're just trusting yourself to be able to withdraw that capital. So BitVM was that trigger that sort of, I believe, that kickstarted research in Bitcoin L2s, because now people are like, well, these can be fairly trustless, like almost trustless, because 1 of N is actually far superior to M of N type of security assumptions that you have. And obviously people will keep doing more R&D and try to come up with even better models. So that's sort of like where we stand in terms of bridge security, that I think there has been a drastic improvement, especially with BitVM. That's the same thing that Stacks is doing. We're going live with the M of N security bridge in a couple of months. And then we are already kicking off R&D for BitVM-based bridges that would actually drastically reduce the trust assumptions that users will have. So the second dimension is what sort of consensus the L2 is using, and how is it sort of like, benefiting from Bitcoin security. Again, there are different models. Like in certain cases, your L2 is like completely independent of the L1. It has nothing to do with it. Again, I'll give the example of Liquid. It's a completely separate network. It has nothing to do with Bitcoin security, for example. But then there are other models, like for example, Rootstock. It does merged mining with Bitcoin L1. So depending on how many Bitcoin miners are doing merged mining, you can say that, hey, 40% or 50% of Bitcoin hash power is actually securing the L2. What happens with Stacks is the Stacks is actually storing all of the L2 blocks storing the hashes of all of the L2 blocks on the L1 directly. And the way the consensus works is that it inherits Bitcoin's reorg security. So when I think about like, security of a blockchain, especially a blockchain like Bitcoin, I am mostly concerned by reorg protection, right? If I did a Bitcoin transfer, the security level is really how hard it is for someone to come in and sort of like reverse that transaction or reorg a block, right? And that's where the Bitcoin hash power comes in. So Stacks inherits, or especially the new version that's going live, it inherits 100% of Bitcoin reorg security, meaning that to reverse a L2 transaction, someone will have to go and reverse the L1 blocks, right? And which is a really nice property to have. Imagine from a UX perspective, let's say you're using a wallet like Ledger. It's a popular web wallet for Bitcoin. So you move your BTC from L1 to L2. It's a little bit like in Ethereum, how people go from ETH to WETH before sort of like swapping it with stablecoin and so on. So the person, let's say I am doing a L1 transaction and Erica is doing a L2 transaction. For the L1 person, the UX is going to look like, likely the gas fees are going to be very high. Bitcoin fees went up by 200x last year. And it's going to be slow. Bitcoin blocks are between 10 to 40 minutes. And on the L2, let's say it Stacks, especially after the Nakamoto launch, the UX will be that gas fee is cheap. It's sort of like fast, like in 5 seconds or something, you get a confirmation on your block. But as soon as a Bitcoin block arrives, that's when the L1 person gets the first confirmation. Let's say it was between 10 to 40 minutes. All of the L2 transactions are now following Bitcoin finality. right? So in some way, this like is faster and cheaper on the L2, but from a security perspective, you're getting 100% of Bitcoin reorg protection as soon as a Bitcoin block arrives. And I think that's a very, very interesting property to have. Some of the other L2s, they're looking at even, ZK-based approaches and all sorts of other consensus algorithms. My personal view is that because Bitcoin L1 is sort of like so slow itself, that finality comes after, let's say, approximately 6 blocks, and a block could be 10 to 40 minutes, that those things might actually have like a bad UX for majority of the users, and eventually they'll have to look into some sort of a L2 faster consensus, right? Because you want to give users some guarantee that your transaction actually went through without waiting for the full Bitcoin 6 blocks finality that would happen. That's why I think at Stacks we're super focused on the faster L2 consensus. For example, today there's something like $1.5 billion locked in consensus, and that's the capital that is sort of like signing off on these faster blocks. And I think for most users, that's like good enough security, especially if as soon as a Bitcoin block comes, you start following Bitcoin security from there. The last thing, which might be important to a lot of developers over here, is your programming languages or what the VM looks like. So I think most of the L2s that I'm seeing coming up in Bitcoin these days, they're EVM based. That's sort of like the most straightforward thing. A lot of people know Solidity. There's a lot of tooling already available. So Stacks is sort of different. Like we've spent a lot of time doing R&D work on a new programming language. It's called Clarity. So it's non-Turing complete. It is a decidable language, meaning that even before running a program, you know exactly what this program can and cannot do. Right? So think of that as a very sort of like language that is extremely focused on safety and giving developers the tools that makes it harder to sort of like hurt yourself, right? And but with the Nakamoto launch, we are actually upgrading to WASM. So Clarity would actually run against WASM, which is I think a sort of like an interesting place, because once you have WASM, not only the Clarity programs get faster, but that it opens the doors to introducing runtimes like Rust or potentially Solidity as well. So that's like further down the road. But right now, if someone wants to build on Stacks, they'll have to learn Clarity. If you want to build on some other L2 like Rootstock or the newer ones, you can actually probably work in Solidity as well. And I think that's type of experimentation is actually great, because I would love to see all sorts of different experiments running in the Bitcoin L2 ecosystem and developers sort of like figuring out where they want to go and build. So I think with that, let me sort of like skip into some of the more specific things about Stacks. Like it's a pretty interesting sort of like ecosystem where I feel like we've been leading the charge in a way for Bitcoin L2s, like especially when there wasn't a lot of interest in Bitcoin L2s back in the day. These were the developers who were heads down and actually building these things. And in terms of like developer traction, I think it's one of the top L2s other than Lightning that has like significant developer traction. Is something that I'm very proud of. It's a very decentralized ecosystem as well. Like back in the day, the project started with a SEC qualified offering, and the flip side of the SEC qualified offering was that we had to decentralize a lot, right? Like right before mainnet launch, the early team members are like dispersed into like their independent companies. I am at a company called Trust Machines, and I raised independent capital to sort of like work in the ecosystem and push these L2s forward. But I feel like all the work we did during the quote unquote dark ages of Bitcoin is like coming back now, because we're in a great shape with a thriving ecosystem of developers and applications. Like when interest is coming back to Bitcoin, when capital is coming back and users are coming in trying to play around with this ecosystem, all of the work we did over the previous like 3-4 years is actually being very, very useful to Stacks right now. So in terms of like what to expect in the L2 space, I would say Stacks is going through a major upgrade. It's called the Nakamoto launch. It's scheduled to start with Bitcoin halving. And that's like, Bitcoin halving is sort of like our Super Bowl, right? Like where all attention is like on Bitcoin. And I think that's a great time to launch something, because a lot of people are actually paying attention. So that's how, the Nakamoto launch is sort of scheduled to start happening. I think it'll happen over 4 weeks or so. But the start is aligned with Bitcoin halving. That's going to be pretty cool. And I think if you want to follow along, you can probably go to the Stacks website and see what's launching with it. And there's sort of like a exciting developer sort of like community where they're timing all of their launches of the new applications with the Bitcoin halving as well. So I think Bitcoin halving is like becoming like this event that not only the Bitcoin for BTC, the asset, it's going to become more valuable because it's going to become more scarce, there's actually like more developer activity and a path towards making Bitcoin productive. So instead of just having Bitcoin as a passive asset that you couldn't really do anything with, now with L2s, you would be able to deploy it. You would be able to, for example, potentially earn a yield on your Bitcoin or lock your BTC and get some liquidity. Like a lot of Bitcoiners, they don't want to sell their Bitcoin, right? But you can actually lock it up in a smart contract and take a USDC or a Tether loan against it. And that's something that a lot of people are interested in. So I think we're about to see almost like this new category. Like right now, the two biggest categories in the industry are either the alt L1s like Near or Solana and their ecosystems, or ETH L2s. Most of the scalability in Ethereum is happening on the ETH L2s. And I think that the Bitcoin L2s are probably the third category that's emerging, and it potentially could be a very big one. Obviously, I'm biased here, but I do think that that category could be very interesting. So I think I'm gonna sort of like skip over some of the more technical things here. But in general, if you're not familiar with the Stacks ecosystem, I think go check it out. As I said, that it's extremely decentralized. So if you're a developer and you want to, for example, let's say get started, you should go check out Hero. That's a dev tooling company in the ecosystem. They have a platform, like it's almost like a web interface where you can quickly get started with your program, can even deploy it on testnet and with a single click. And they have most of the libraries and dev tooling that you would need if you want to get started on Bitcoin. They're doing some super interesting work, especially when the Bitcoin bridge goes live. Most of the economy on Stacks would be running on BTC, right? Like you can potentially pay your gas fees with BTC. It's BTC capital that you're deploying and that you're programming. And I've been to hackathons where people get really excited, where for the first time they can actually interact with Bitcoin. Like they can actually deploy it, they can actually write programs against it, because this is something people haven't seen before. Bitcoin script is so hard to work with and it's so limited that people always sort of like assume that, hey, Bitcoin is not really programmable. And that's like really changing with the work that Stacks is doing, plus some of the other L2s as well that are coming up. So it's a really exciting time to be in the Bitcoin space. One of the things that we've been doing over the last 1 year is try to expand the category of Bitcoin L2s, because I think we're at a place where sort of like we would want to attract more and more projects and expand the pie, right? Like depending on how you measure it, but Bitcoin L2s is something like a 5 billion market right now. Compared to ETH, Ethereum L2s is something like 80 billion or something, right? Whereas Bitcoin is the larger asset class. There's more capital for developers to play with. And I think that sort of like indicates that we are very, very early in this space. And a lot of our effort is try to educate more people about what's happening in Bitcoin. It's not a pet rock anymore, right? It's not a place where, people yell at developers anymore. There is a thriving developer community. People are super friendly. Yes, there's still some element of, some crazy maxis here and there, but that's dying off. And I think that's probably some of the, I've never been this bullish on Bitcoin in my life, because the one thing that was sort of like always irritating in Bitcoin was, the community was not embracing developers, and they weren't like doing interesting things with BTC, the asset. And that is the one thing that has absolutely changed. Thank you so much. Thanks so much for listening, and you can follow along online.